So for today's explainer, we're diving into a really perplexing financial story out of the Faroe Islands. It's about a company that, according to all the public records, has been losing millions for years. And yet, somehow, it keeps attracting huge investments from some of the savviest players in the market. And that, as you can imagine, raises some pretty tough questions.
I mean, really, think about it. How is that even possible? How does a company keep getting infusions of cash year after year while it's bleeding millions at the same time? That is the head scratcher we are going to try and unpack today. All right, let's get into it. The company right at the center of this whole thing is called Globe Tracker APS. Now, on the surface, what they do seems pretty straightforward. Their finances, though, well, that's another story entirely. So, what is Globe Tracker? It's a tech company, and their idea is actually pretty simple and valuable. They develop systems to track cargo as it moves all around the globe. And since 2007, they've been unbelievably successful at one thing in particular, getting millions in funding from some of the most prominent investors in the Faroes. Okay, so that brings us to the next logical step. We need to follow the money. That incredible success in fundraising just begs the question, who exactly is writing these checks? Because, and let's just keep this front and center, the company is consistently losing money. So who on earth is keeping the lights on? Who is funding its operation? Well, here's the list. And look, these aren't just a few random angel investors. We are talking about major players. Pension funds, life insurance companies, these are the institutions that manage the public's money. You know, they're supposed to be the careful, sophisticated ones, which makes their continued support, well, let's just say it's very curious. And the financial reality of the company is just, it's brutal. A newspaper report from 2018 laid it out in no uncertain terms, saying the result for Globe Tracker last year was a deficit of 17 million, and the equity was minus 28 million. Ouch. Let's just pause on that number for a second. Negative 28 million. To put that in really simple terms, it means the company's debts were massively larger than all of its assets combined. Financially speaking, it was completely underwater. So what happens when you have a financial hole that big on your books? Well, for one of those major investors we just saw, it meant they were basically forced to face the music. And just how harsh was that music? Well, that investor, PF Frihedsbrevet, had to officially revalue its entire multi-million DKK investment in Globe Tracker down to a single krone. Not a million, just one. Okay, so on paper, the company is effectively worthless. And yet, the money just kept flowing in. To even begin to understand why, you have to look closer at the ownership structure. And believe me, this is where things start to get really complicated. So if you pull the public records, these are the direct owners. And hey, there are those familiar names again, the big investment firms, the insurance companies. But hang on, look at that second name on the list, GT6, January 2017 S. What is that? Well, it turns out that's not a normal company. It's what you call a holding company, basically a company created for the sole purpose of investing. And when you look inside that company, the web just gets even more tangled. Would you look at that? Who owns this special investment vehicle? It's some of the very same entities that also invest directly in Globe Tracker, like Roy Linden and Norðoya Félag. So they are essentially investing in the company through multiple different channels at once. Okay, let's just try to put this all together. You have major firms investing in Globe Tracker through the front door and also through a side door company that they also own. And on top of that, you have the very same person sitting on the board of directors for both Globe Tracker and one of its key investment vehicles. The lines here are getting very blurry. And this kind of circular structure with the persistent losses and all these overlapping investors, it raised a huge red flag for the original author of the piece we're examining. So much so that they drew a parallel to a pretty major historical scandal. Now, let's be really clear here. The author isn't making a direct accusation. They're simply pointing out some uncomfortable similarities. On one side, you have a historical scandal where a company that constantly lost money was propped up by a pension fund through a complex web of related companies. On the other side, you have the Globe Tracker situation. The author uses this comparison to ask the crucial question: who ultimately benefits from this continuous flow of cash into a money-losing venture? And that brings us to the end. Because after you dig through all the data, after you map out the complex structure, This entire situation really boils down to two simple but incredibly powerful questions.
First, and this is the central paradox of the whole story, how can this company be so bad at selling its actual service, but be so unbelievably good at selling itself to the country's most sophisticated investors?
Which, of course, leads to the final multi-million krone question. For the pension funds and the insurance companies that are investing other people's money, how does this possibly make financial sense? In the end, the public records give us all the pieces. We can see the losses, we can see the investors, we can see the tangled structure. They lay out this fascinating puzzle for us. But the one piece you can't find in any of the records is the answer.